might be good to talk about what's coming up this year. I think that's the question on a lot of people's minds. I would go back to what you just said. If you're going to be the educator, if you're going to be the one that knows what's happening, you sort of have to know what to expect. You have to be, educated on that. And
At
there are a
least
lot of
sound it.
people that are speculating on what to expect.
Yeah.
That's what I don't want to give you. I want to give you what is going to happen and give you the sources of that so that you can be that advice giver for this year. So
That's good enough for me. We're live streamed. Hey, everybody. Welcome back. This is the first edition of 2020 of what the current market looks like with my friend from Keeping Current Matters, David Childers. David, how are you, man? How was your holidays?
Johnny, we're doing good. Had a great break, great holidays. Been a while since we've spoken, maybe a month or more. And you're right. Happy New Year. Happy New Year to everybody that's getting on here. Good to be back and excited to talk today, as always, about what's happening across the country in real estate.
Yeah, and if you're listening to us in the Facebook LabCoatAgents group, give us a little thumbs up over there. And if you have any questions, put them in there. We'll monitor those as we go through. If you're listening to this on the Zoom, just post your question up in the chat section, and we'll be more than happy to get to them. And man, it's 2022. What is today? The 7th? Man, the market has crashed, David. Yep. The market has crashed. That's what we're going to talk about. Oh, wait a minute. No, it hasn't, has it?
Not quite. We'll talk about that today. But, probably the biggest news, Johnny, today is unemployment report came out today. Mm-hmm. Economically speaking, wasn't what forecasters thought it was going to be. I don't know how many people took a look at that. We won't go deep into that. But I think some of this economic news is having a bearing on mortgage rates. Certainly that's bearing. And I am going to bring what to expect this year in the real estate market as we kind of wrap kind of the last little section we'll talk about, Johnny, what experts are saying about rates. But I think you're going to see some. We've even seen volatility this week. Average 30-year fix came out yesterday at 3.2%, but still phenomenal. But I think we're gonna continue to clip higher. Certainly, with
still damn near free money.
I mean, it's really, really good. Even being in a rising interest rate environment, still talking in the threes, was pretty good. But hey, let me say something too. I got the chat open here. If there are questions, let us know what your questions are here on Zoom. If you're on Facebook, Johnny, maybe if you can look at Facebook, if you have that open in the LabCoat group, let us know what your questions are so we can talk about those.
Yeah, for sure. I'm bringing that up right now. So don't be shy. Let's just jump into it. We got a lot of stuff to talk about.
So let's do that. Let me give you an update on where we're at with listings, where we're at with buyer demand, and just kind of maybe define reality, if that's the best place here on the 7th of January to start, Johnny, of where we're at in the business. So let me share my slides like we always do. Great quote here from Bill McBride. He says, "Is it possible that rising mortgage rates will slow the housing market?" Yeah, it's possible. I don't think so, but certainly a possibility. Or the Fed might raise rates sooner than expected due to the recent pickup in inflation. Certainly, yeah, it's possible, speculation. But I believe one thing is certain: inventory will tell the tale. That is the truest statement right now, Johnny, about our business. There's so much speculation. What's coronavirus going to do? What's rising mortgage rates going to do? What's the Fed going to do? What's happening with inflation? The moral of the story in real estate this year will be inventory. We will not reach the market potential. We cannot sell what we don't have in real estate right now. And let me give you this: the bad news, listings are at record lows. So coming through the winter, the last couple of years, a lot of reasons for the depletion of inventory all across the country. And I don't say that to say, hey, let me be a Debbie Downer here. I'm saying that's what we need. Our job as professionals is to bring listings to market. If we go and look at what it looks like across the country, this is from Realtor.com as of December 2021. So this year-over-year look, December, where were we at in December 2020 as compared to December 2021? Nationally, you see there at the bottom of the slide, down about 27% year over year. You can see, depending
Wow.
on the state, how far down, maybe as far, you see the dark blue there, Idaho down 55% year over
Wow.
year. The average somewhere in that brown color there, 15 to 30%, I believe, down across the country.
Look at Flowrider.
But no doubt, no, almost 50%. You're right. I mean, so no doubt we need listings. We've talked a lot at Keeping Current Matters about how we believe a lot of people are sitting on the fence going, is now the time? And I'm going to talk about that. But we need to bring those to market. If you look at this over time, Johnny, going all the way back to January of 2019, this is the look. We're 4 months, call it, in 2019. We bumped down, and the shoot up there is the lockdown in April and May of 2020, and then just have depleted inventory across the country. A lot of reasons for that. You and I, Johnny, have talked extensively about that. But bottom line is we need more inventory across the country. And, I tell you that not in, many of you on the call are like, well, I know that. These are graphics you can use from Keeping Current Matters to really show sellers right now why it's an optimal time to sell. When do you want to sell it? Whenever there's less of a product on the market. But also to really realize that is our number one goal, is to bring listings to market. So let's talk buyer activity. Many folks have reached out in the last couple of weeks, and everything going on that I mentioned before, from interest rates to inflation to even this little surge in Omicron and COVID. What's that going to do to real estate? Well, could it cause some folks to say, I don't want to sell right now, I don't want to bring people in my home? Maybe it could, but I think our job is to show them how we can do that safely. One thing I'll guarantee you right now is it's not stopping buyer demand. We got a tremendous amount of buyer demand out in the market. Showing time shows showings are crushing right now pre-pandemic numbers. Latest numbers going into November, we're well above where we were in the years leading up to the pandemic. This past year, well above where we were even in 2020. And, as we've gone into the holiday season, or just finished the holiday season, Michael Lane from Showing Time said the showings traditionally lag during the holiday season, but the data we're seeing tells us that buyer demand remains strong. The fact that every region showed a year-over-year increase indicates that buyers are undeterred. It speaks to their desire to keep searching for their next home. So bottom line, Johnny, right now, holidays, everything out there, not slowing buyers down. We need the listings, but buyers are coming fast and coming into the market still very, very strong.
Well, think about it, right, man? If we go back to 6th grade economics, supply and demand, right? People need a place to live. The demand is always going to be there, right? They always will need a place to live. That's not an option. Now, they might be able to slow it down for 6 months, a year, or something else like that when the market crashed and everything was messed up and they weren't lending, gave everybody a chance to breathe and take a look at their mistakes of times past. But there's still such a demand on properties. You take a look at Florida, right? And I know this is a little bit regional. You'll take a look at Florida. A lot of people are moving down there. They have always been moving down there. Okay, so it's not a conspiracy thing, and I don't want to go down it. They've always been moving down there. When I did my feasibility study in 2018, when I was working on a project down there, it was like the population was going to grow 6 million over the next decade, right? It's going to be like 13 million now at this point. You think about it, the baby boomers are retiring, right? They're moving down there. People like me are sick of the cold, and I can work from anywhere, so I'm going to be moving somewhere warm next year, that's for sure. Probably Florida, because it's easy in and out, right? Major airports everywhere. But then you look at, some people are deterred about lockdowns in very aggressive states, and Florida doesn't have any of that. So that's a whole nother reason that people are like, I'm out of here, Chicago, I'm out of here, New York, see you later. I'm out of here, Boston, and I'm going down there. They were going down in 3 years, but they just moved it up a little bit.
Yeah, it's interesting. There's actually an answer to that, Johnny, that is a trend that researchers are seeing. And again, I agree with you. There is an element of it that it certainly is covered as political based and all of that. And you and I aren't going to get into that on this call. It's not
no
worth
interest.
It. And I would coach everybody on this call. It's not worth it to get in that with your clients. But the trend we're seeing nationally, they've sort of coined birds of a feather. you know, and we're seeing that in real estate. We're seeing people go to areas that they believe, you know, are more likely to be favorable to what they believe, you know, and makes sense. I mean, I don't think there's any of us that goes, that really doesn't make sense. It makes absolute sense. But you're going to see more and more of that, I believe, in different areas of the country.
Yeah, I do believe that. And then you take like where you live, right? DC is never going to sleep. It's never going to rest. It's always going to be moving. You got a lot of military there, a lot of headquarters there, a lot of government there, a lot of supportive businesses there. It's not going to sleep. So, you know, some of these areas just are being impacted that much more. So based upon that inventory being low, I would think the price is going to continue to increase. And I think the last time we talked, maybe it was the time before that, we showed, you know, the appreciation over year, 18%, 18.3, I think it maxed out at. And you know, all the head cheeses were saying that they are anticipating like a 5 or 6 or an 8%, you know, 3 to 5%, I think it was appreciation, which is healthy and normal. Where are we at with that? I think that we're going to see prices continue to increase despite rates because there's a lack of inventory.
Well, the tale of the tale will be told by inventory. There's no doubt in that. Now, I think I'm going to cover this. I've got slides on this. We can hop to that and what to
I know you do.
Let's pause that conversation. I'm going to tell you, I'm going to show you what is happening, and I'm going to tell you what I can guarantee is not going to happen. Okay, so I'll leave it at that. But before we hop into that, let me give you an update on what I think is the biggest opportunity to bring sellers to market. Okay, Johnny, you and I have talked about this many, many times over the last year in doing these lives. And I think there are some show-stopping numbers, so to speak, that are coming out about equity in homes across the country. Let me share my screen and give you that latest update around equity. You see that right there, the Corelogic Q3 homeowner report. The average equity gain in a home this year on a home with a mortgage, $57,000. I mean, right now I would be on the phone with everybody that I've ever sold a home to, ever been involved in a transaction of, and said, do you know how much your home's appreciated in value this past year? Everybody's wondering, everybody kind of knows. They saw the neighborhood or the home over here in their neighborhood sell for whatever, and they're wondering, gosh, I wonder how much equity is in our home. Listen, the curse of knowledge right now in real estate is we know that. I would not fall prey to the belief that everybody that owns a home knows that. I think they kind of wonder, but a tremendous amount of equity growth due to the price gain, Johnny, in the past year. 31.1% year-over-year increase in equity in homes with a mortgage. 3.2 trillion, you know, tappable equity is surging across the country. The summer, they go on to say the summer home price growth reached the highest level in more than 45 years, pushing equity gains to another record high. Again, I'd be on, I see there's a chat question there. I'll take a look at it in a minute. I would be talking to people right now, picking up the phone, sending information to them about what your home is worth. Let's have a conversation about what that means.
Yeah. And I'm gonna go out on a limb and say this, and I would be following with this. My friend Saul Klein, one of the smartest people I know in this industry, has done so much positive stuff. Just a great person. He always says, Johnny Mo, what's your ARPU? Average revenue per unit, right? What's your ARPU? And that's why I don't know if that's the main reason, but by him following that principle, he became a tax planner. He became a certified financial planner, and, you know, investment specialist, if you would. And so now all of a sudden, when you close with somebody, you can offer them this other service. Didn't make much money from it. It was just to give good service to lead them over into the other area. What's your ARPU? Now take that with a grain of salt from one of the most brilliant minds that our industry has been blessed to know. And you can do the same thing. Hey, David, it's Johnny Mo. You have the conversation. Have you ever thought about investing in real estate? Because I'll tell you what, there's so many ways to invest in real estate, and you need some money, right, to buy that investment property. You have it. There's your traditional investment, buying a 2-3 family, right, up to 4 family. There's the commercial stuff that's 4 families and above. That stuff you definitely need some hands-on and knowledge of how to run an 18 unit. But then there's other things. Check this out. I just learned this yesterday. There's other things. I mean, Airbnbs I've known for a while, right? But Airbnb is another way. You don't even have to be local. They got people that will clean and do all these other things. So you can buy a mountain property 4 states away. There's systems in place to ensure that it's going to be managed properly. But nurses are in high demand right now because they got pop-up clinics everywhere. Travel nurses. So they come to a location for 13 weeks, whatever the contract is. They need a place to stay.
Right.
So there's investors out there buying Airbnb type properties, and they have nurses. They're renting a room. They have 3 rooms. They rent 3 rooms for whatever the number is. Okay. But they're making money doing it. You just got to figure out where are the travel nurses going to, and get into that realm. But again, this is another way. I was also mentored by Fred Newcomb, who was a prior CFO of Putnam Funds. And he took them from like 3 billion to 6 billion or whatever in his tenure. And Fred told me, you don't want to be on this side. Put this line in the middle. The majority of people are on this side of the line paying into the economy. You want to be on this side of the economy where it's paying you. Yeah. And that's where freedom comes from. That's financial freedom, is on that side, right? Now, learn this stuff, get knowledgeable in this stuff, right? We're always talking, David, about upping our game with your data and positioning ourselves. Learn about these investments. That way you can create your own inventory, right? Say to somebody, hey, listen, have you ever thought about an Airbnb? We have a lot of doctors, surgeons. If you're next to a hospital, they have surgeons and doctors and everything coming through. What do they call those? Fellowships and internships and everything else like that, right? Provide that value. Help people provide that value, and you'll never worry about a sale again.
Yeah, no, I think you're absolutely right. Johnny, I want to go to the question that was asked. I don't know if there's anything on Facebook, but Lori asked, where do we find equity stats in our own areas? So certainly equity is going to be public record information of what the lien was filed against, or lien for the purchase of the home. It's maybe not exactly accurate, but you can get that. I don't know. Lori, if you want to email me, it's david@keepingcurrentmatters.com. I can send you the link to this report nationally. You can check Corelogic, but I would check, connect with RedX. I know LabCoat has a great relationship with RedX. They may have some list of things that allow you to connect with people on their equity out there and be able to do that. So I think that would be important. Email me. I'll send you the report, david@keepingcurrentmatters.com. If you want to take a closer look at that. Okay.
I would think your local association has that information too.
They could as well. Yeah, that's a great point, Johnny. Your local association may have, but certainly the lien information is public record. It's findable out there. So, I think the other thing, Johnny, maybe we've got about 10 minutes left in this session that we do. Might be good to talk about what's coming up this year. I think that's a question on a lot of people's minds. I would go back to what you just said. If you're going to be the educator, if you're going to be the one that knows what's happening, you sort of have to know what to expect. You have to be, educated on that. And there are a lot of people that are speculating on what to expect. Yeah. That's what I don't want to give you. I want to give you what is going to happen and give you the sources of that, so that you can be that advice giver for this year. So I'll share my screen again. I give you that. Then Johnny, let's talk about this after the fact about it. So what to expect in the 2022 housing market. First thing we talked about, we kicked this off talking about it. Mortgage rates. I think we're going to see mortgage rates rise this year, and everybody that we watch from Keeping Current Matters here, Freddie, Fannie, MBA, NAR, all say that. But I'm not here today, let me be clear on this, to kind of pinpoint where we think rates will be. I think that's a fool's game. I think it's very, very hard to do that. But I'm telling you, somewhere between 3.5%, 4% is, inside of this year is where we're going now. Yesterday, the average 30-year fix ticked up to 3.2%. I will tell you today in the jobs report, there's volatility in the bond market. Expect to see those higher rates. Expect to see some fluctuation and some instability in rates. But the overall trend is that rates are going to be heading up. Don't think it's going to slow down the market. Don't think it's going to cause us to sell fewer homes. But be the educator with the clients that you serve so they're not surprised by that and surprised by these movements in rates. Next thing I think is forbearance is going to become a non-issue. This was a big topic we talked about last year, Johnny, and is it going to cause a wave of foreclosures? The quick answer is no. Forbearances have finally fallen below 1 million. About 890,000 mortgages right now in forbearance. To put that in perspective, is about 1.6% of mortgages. It's become a non-issue. Johnny, we've tracked since day one people coming off of forbearance, and I can tell you 4 out of 5 coming off of forbearance haven't needed it. They went through a workout with their bank, they paid it off. It's a non-issue. There are those that are in trouble, but I do not think this is going to be anything that's going to bring substance to the real estate market in 2022. And a matter of fact, Corelogic says this: we may see a little bit of an uptick in foreclosure rates in 2022. Now, reminder, uptick over an extremely low number, just an uptick though from an extraordinarily low level. We're not expecting to see a big increase. We expect delinquency rates overall on home mortgages to actually continue to remain quite low.
And listen, this is coming from Corelogic, right? They control so much information and they have so much information at their fingertips coming through their systems. If there's a company that knows, they're showed on the list.
Yeah.
Right?
Yeah.
So
but the bottom line is, Johnny, there's still people out there going, I know it's going to happen. I know we're about to see that. And I got to tell you, the information does not support anything near that. Nothing near that.
If you can wait long enough, you'll surely be right.
That's what they say. That's what they say. Let's talk about home prices. This is a look, Johnny, that you just referenced. Yeah. Has home price acceleration peaked?
Y'all should be taking a picture of this.
This is the question right here. And we're going to ask this, has it peaked, as a question? Mm-hmm. I'm going to tell you something that's becoming very, very apparent. Home price acceleration, while coming up and maybe not peaking, maybe plateauing for a little while. But I'll tell you what I think is going to happen and what I guarantee is not going to happen. We went through the year, and this is a look going back to January of 2020. The term that we've used and certainly experts have used is deceleration in pricing. That does not mean depreciation. It means less appreciation. Is that we're not going to see this market go from 18, 19, 20% appreciation down to 5. We're not going to see 3 or 4. We're not going to see that. As a matter of fact, I'm going to show you what forecasters are saying. They're saying around 5 right now, but what I'm going to tell you is I'm starting to see them edge up higher. They're going to up level these forecasts. Mm-hmm. And so to your point, Johnny, is it going to go higher? It could. I think it could. I think the question is, has it plateaued? Are we going to stay here at 18, 19, 20% appreciation going into this year? I think there's a high likelihood that we could see a lot more appreciation. This is a look at those forecasters. If you look at everybody forecasting right now, several things I'm going to draw about this. You got 2.8% to 7.5%. Big range of what is being forecasted right now. The average 5.2%, and they are up leveling those forecasts as months and days go by. Will all be determined by supply and demand. So I think we're going to see heavier appreciation this year than what many certainly in here expect. And another year of great appreciation in home prices. I'll go back to Corelogic here for a kind of a closing thought, and then take the slides down, Johnny. So overall, I do think that 2020 will be another strong year for housing, albeit a little bit higher mortgage rates. And we do think home sales will continue to rise, actually reaching a 16-year high in 2020. Should be a very, very good year in real estate, Johnny. I do think we'll see that appreciation like you spoke of continue in this country. But overall, our job is to be the educator and be the one that can confidently communicate what is happening in real estate.
Yep, I think you're 100% right, and I'll hang my hat on Corelogic. I mean, there's a lot of MLS data. They run a lot of MLS data, right? And so who's seeing the data? Them first, right? So they're able to take all these projections and everything else like that. It'd be interesting. I don't know if you guys have this data at all to see. I don't know who would have this data, but to see what the list to sold prices are and come up with that number, right? Is it 7% over or whatever like that? But also to see, are people accepting closing cost transactions anymore, right? Because that was a big thing when I was selling was, it just roll it right in, right? But I don't know if that even exists out there, especially not in the hot markets, right? Where you have a bidding war. So it'll be interesting.
They certainly don't need to get the home sold today. That's the reality of our business. Couple of questions that are out here. Let me grab these real quick before we wrap here. Crystal, will these slides be available to attendees? Absolutely. You can email me, david@keepingcurrentmatters.com. I'll send them to you. Johnny, I can send them over to you. You can get them out to folks as well. Sure. Send them to Labcoat, but feel free to email me, Crystal, and I'll get those to you. Excuse me. Dawn, what do you asked this, what do you think will happen with builders? Will it ramp up? Johnny, you want to take that one? You want me to answer that?
You can. I mean, I have my suspicions, but I'll listen to you first.
Okay, here's what I believe with builders backed up by the data, Dawn, is that builder optimism is an all-time high. They realize now is a great time to build. I think they are going to have continued issues in the market this year with supply issues, land issues in some areas. But I'll tell you this, if they could build them faster, they would. So I think they're going to try to build as much as possible. I do not think it will be enough to anywhere near meet the demand that's in the market.
Yeah, I agree with that. I also agree that you're going to see new construction prices continue to increase because materials, supply lines, those kind of things are always going to be funky. But again, it's supply and demand, right? The problem I think you're going to run into is you sign a contract on that new construction today, that thing is not going to be ready within 12 months.
Well, right? There are a lot of builders too that are saying, hey, I'm not going to price it till I build it. Yeah. That's happening everywhere. Let me tell you something else, Dawn, that I think is
5% appreciation going forward, which is still healthy and excellent.
One other thing, Dawn, that's happening is it's going to make, and this is already happening, it's going to make the price of new homes is going to continue to rise. It's going to make an existing home more attractive from a financial perspective when you're comparing apples to apples. You're going to see better value in existing homes because new homes are going to continue to rise in price. Cheryl, you asked, how much will the supply chain challenges affect pricing going forward? Gosh, I do not have a crystal ball and do not know the answer to that, but I think we will work through those issues this year, but I don't think they're going to be solved overnight.
No, and not on top of that, you're going to have the compounding effect of inflation, which is real.
Sure.
So that 5% is really 10% or 8%.
That's a great question.
Yep. So I shared this. I shared it a little prematurely just to make sure that it worked because it wasn't working through AirPlay because it told me I need a plugin or update. This is what I say all the time, David. Does this look familiar to you? I mean, you just basically shared this slide, right? Or something very similar to this. I took it last month because I said, listen, I'm going to go in and do it. I have never done this before. I actually have like 7 videos in TikTok. I don't even know what I'm doing. But you can take this, you can go out, you grab your, you use your phone, go to Keeping Current Matters, find the blog, take a couple screenshots, right? Now put you in front of that explaining what David's explaining to you every other week, right? Yeah. You've got content now, right? And this is just
one time to sell your home. What's going on with the housing prices? Have we seen the peak of where they're going, or we're going to start to continue to see massive appreciation? According to this chart,
I don't need to play the whole thing.
Yeah.
but you get the gist, right?
Let me say something about that. If you're not following Johnny, and Johnny, tell them where they can follow you from. You need to be. He is the best at doing this and using a visual to tell a message.
Just find us anywhere there's Explore My Town or at Follow Johnny Mo, right? Follow Johnny Mo is the social media channels. That's me. Explore My Town is what we do, right? But for sure, definitely use this information, make videos, stand out, be different. Saul Klein posted twice in one session. Saul Klein posted something today in LabCoatAgents. Y'all should go read it. And it's about paradigm shifts and things like that. And where are we going to be in another 3 to 5 years? And, you know, all this other great stuff. And again, he's a futurist. He sees 10 years in the future. And you're going to put your cut. You don't even know you have cognitive dissonance. Your job is going to change in 3 to 5 years. It is going to be more difficult, less competition, but also less people, because systems are being put into place that are going to streamline the process or make it like a gig economy. I just need somebody to show a house, $25 or whatever it is, right? Boom, boom, in and out. You can get the P&S written online and all these other things. Heck, even some states are going to have fill in the blanks. How much do you want to offer? This, that, the other thing, bang, right?
Yep.
This is happening. Despite you saying, oh, real estate's a human to human game. Who's going to be? There's a whole lot of people that are under 30 years old who grew up with these phones, these technologies, these apps, and everything else like that, who are going to be buying in the next 3 to 5 years, who order their food online, have their everything that they need delivered to their home. They have no human to human contact.
Yeah.
They just need somebody to open the door, and they'll do their own due diligence because these tools are coming out, right? So you got to do something to stand out, to be educated. There's 1.5 million real estate agents out, or realtors out there, even more real estate agents.
Yeah.
Why you? Because
Great
you get
point.
the best team?
Yeah.
Because you just posted, sold another one, right? Now, be the educated source in your community. And I can promise you, if you do one video like this a week, you'll start to build a following locally.
Yep.
Right?
And I'll close it out this way, Johnny. With that, the reality in a market like this, going into a year like this, with what we've seen, uncertainty kills deals. You can create certainty in your clients putting that kind of content out there. So my advice for everybody on the call: go follow Johnny, watch what he's doing, get engaged in that, and just start doing it. Just start doing it, and you'll deliver that information. So
you know what?
Johnny, as always, great to talk.
You know what never won a trophy? Was Gunners. Was Gunners. Was Gunners don't win trophies. Do. People that do. People that do.
No, it's a good point.
So
as always,
get at
it
it
together.
Go to keepingcurrentmatters.com, get your 14-day free trial, and start to be the most educated realtor in your area and stand out.
Absolutely.
David, I'll see you in probably 2 weeks from now.
Sounds like a plan. Take care.
Thanks, everybody.
All right. Bye-bye.